Hey traders, it's E from MarketWizards.com. Midday on Sunday, the 22nd of October, 2023. Reminding traders to use risk capital you can afford to lose. Let's take a look at the ES. We haven't done that in a while. I keep track of ES and the NQ. We are working with a group of traders primarily focused on NQ, but we do talk about the ES as well, as we think that's an important vehicle to monitor. It's a very large body of traders that follow this and trade this, so we think it's important to understand that as well, because that helps to move the market. This is a yearly chart, and side by side, so we can see that we're still inside last year's range. This is one box divided in half, second box, third box, fourth, and so on, coming backwards. So we had talked a while ago, back in September, about how we were approaching this 24 area as a support. And as it turned out, it bounced about 10 points ahead of that and took off. And we can see that it's following the rules that I use and the averages that I use and so on, that we're chopping over and under, an important area right now, trying to get a decision made as to which direction we're going. And you can probably see this channel that if your mind just goes to drawing lines both directions and so on, you say, well, certainly can make the case that this is a channel. So this is called the pipe. This square, these two squares, these half squares here, and then this one. So the 456 trade is clearly in progress because we've hit the 40 back, and now we're close to the 50 back. And can we get deeper than that into the 60? Nobody knows. Hindsight will tell us, of course. And a lot of traders will tell us in hindsight that they nailed it too. But, that's, you ignore that because you've got to do your own homework. So what I'm looking at, obviously, is this particular zone up here, especially 43.75. That's a level in our system of importance, and that was rejected. So we're coming back down, and we talked about other levels we'll show you in a minute, but that's the way I'm looking at this. Is this is an inside year. A lot of traders back here we're talking about, no, we're going south, we're going to, this is a weak market. And those traders, some of them have finally given up, and now up here they keep talking about, well, no, we're buying, and that's the purpose of a market, to confuse as many people as possible. And so I'm not knocking guys that are wrong. We're all wrong, half the time at least. But you need to right the ship once you're wrong. So in my opinion, this was a double, and we bounced, took out that high, and we've come up, made the new highs, and then now we're coming back in a regression move. That's all I know. And here's a gap chart. And there's a macro chart as well. And we can see this little head and shoulders in here that I put. And then we had this third time through trade, had a gap, and we've come back down, and obviously double bottom testing these last lows in the lows of October. And I had drawn a neckline on this chart, and that kind of helped me to see that idea that we were fairly weak, especially once we broke 43.75s and come on down. Let's take a look at another chart using the same information, but a different view. And we can see how the settings on this really capture this for that time frame. Okay, so here's that same chart, and we can see just how important the 15-minute chart was in the last couple of days. We rolled over, we came back underneath, and we're in the umbrella trade, green and red and blue and the magenta line. So that neckline, this is the same chart we just saw, but this is now at a different time. And this is what I call scrolling. You've got to find the chart and play. So for day traders, we're using those other charts to give us a heads up in terms of potential direction, because we know the generals move the market. In this chart, we're looking at where can we find an edge for a directional move. And clearly, if you look at this system where the slope line has been busted, can't get above it, hits the neckline, right? There's a throwback line really coming back to test that line that we had there for that last chart that we'd seen. And then we sell off and come down, and everybody trying to buy has missed the idea that we're really in a regression trade of 4, 5, 6. So if you slide this back and you look, this is one of the things I look for. This was a gap that was filled, and we can see just how on the 9th this thing took off and came up and had a pretty good size run. And then we double topped in here. We never could break that 44.18, and I talked at the time 44.14s was a level in our system, so pay attention to that. And if you scroll back a little bit further, a little deeper, then you'll see that gap that you can't see on a deeper chart. So this is virgin territory in here that is holding the longs captive, in my opinion. And again, I'm like you guys, just trying to figure it out. But this is how I do it. I go through and I'll spend my time, I'll do my homework, and I'll try to understand what is really going on. So going to this chart really helps to put that into perspective with the bigger picture. And as such, you got to get back up here above that 43.75 area and to get any kind of traction, in my opinion. So you got to bust all this and get back up here and start to go the other way. And we're still in October. A lot of people like October to turn things around, but so far all we're doing is getting some sideways movement and regression. Let's take a look at another chart. All right, here's a Sigma chart with an envelope around it. And we can see how in the last couple of days, we rejected at the high side. And that's normal. Once it sets, that's going to leave that, and it may drift up a bit, but it's also going to come back as we go sideways. The Bollinger Bands in here, for those that love Bollinger Bands, great tool to use for seeing Sigma. So on a 10-minute level, we can see how sideways, bounce from red back up here. And this was the double top that we got on Friday. This double top held, came back down all the way under the yellow, sideways, bounce, got into the mid-level, and then rejected and came down into the close. Now, a lot of traders would love to see this take off and come right back up here. And truthfully, nobody knows until hindsight. But once it starts back down and traders are trapped and can't get out, then you have to give the edge to the short side that they're defending their turf. And they said, no, we're not coming out yet. And that was fairly unusual on Friday to see the traders not come out. The shorts just say, hey, we've had a good week and I'm staying in this till the bitter end because nobody's forcing me to come out. And anybody that took profits here and locked them is free to go back in and re-enter and say, I'm going to give it one more shot. Let's see what happens using some of the capital you made from the day and the week's trading. All right, here's the the layout for what I believe is our current frame. We call it a frame. 43.75 is an important resistance. 42.1875, an important support. These lines are the middles of those boxes. And until we get back up above 42.9675, we're probing south side to try to find support. Simple as that. Now, most traders that I know of don't believe in this stuff. They'd rather do their own little analysis every day and reinvent the wheel. But the purpose of this is for consistency. Now, I want to make the case for that. Just because you don't know something doesn't mean that it's not helpful. That's perhaps your blind spot. Let's take a look at another chart. Okay, so here's an example of a price ladder or stairs, however you want to call it, with random step sizes, no uniformity. And that's the question that I would like to ask traders. Would a master craftsman build a ladder or stairs like this? Would they have those inconsistent step sizes? Because that's how trippers are formed. That's why building codes exist, to say this is a uniform standard we want you to use when you are building stairs, so that the human body can traverse them more easily without tripping. So, in my opinion, the traders who reinvent the wheel every day, they're using a yardstick with inconsistent measures. And can you imagine, a master craftsman taking out a ruler, and instead of equidistant increments on it, they're haphazard all over the place. They wouldn't do it. They certainly wouldn't be considered a master craftsman. And so I'd like to kind of end this short video with that question to you. Do you really want to keep trading the way you have been trading, getting the results you're getting? And if you're getting great results, why would you change anything? I certainly wouldn't recommend you do that. But if you're having problems, why not look at something else that might help your game? I'm not going to turn this into a shameless plug for my work. Anybody that is interested, go to the website and take a look and think about it and see if this is the kind of thing that will help you. Anybody that missed the opportunity to get into this session, if you choose to join this week, I'll give you a total of 4 weeks. I'll throw in an extra week for the guys that are already here, and you traders that come in will get a full 4 weeks. And that's all I'm going to say about that. And we've had a great week and expect to have another great week coming up. Thanks for listening. I hope you guys have a wonderful weekend. Spend it with family. Enjoy life the best we can, one day at a time, step by step. E from MarketWizards.com, signing off.